Hello, good evening, everyone, and welcome to this evening's free session on the basics of Forex trading. My name is Dr. Aderabi Banjoko of DKB Markets, and I'll be introducing you shortly to DKB Markets and myself, and we'll be talking about what is required or what is needed for you to become a successful trader trading the Forex market, and also why the Forex market is the best market to trade. But before we kick off, very important, I'll just discuss with you the disclaimer. The disclaimer obviously is just to let you know that obviously trading is a leveraged instrument, and it carries a significant level of risk, so it might not be suitable for all investors because there's leverage involved, there's risk involved, so you could lose money. And what I am going to discuss with you this evening is purely for educational purposes, just to educate you, give you some foundation and some knowledge about the market and how to trade successfully. But by no means am I giving you any recommendations, no guarantees in terms of what you're going to do. So this content is just for informational purposes only, and you have to be fully aware that whatever risk you take, you have to be responsible for your own decisions and for the risk you take. So that's just a disclaimer warning you that this is a high risk level of trading, which you need to be very careful and wary about. And this is just purely an informational only seminar. And if you need further training and further advice, you need to seek that in order to make wise decisions in the markets. Okay, so that's just a disclaimer. Now the question is, who am I, and who am I talking to you today about the financial markets and trading the markets? My name is Jeremy Banjoko. I'm one of the directors of DKB Markets. I'm currently a trader and an investor in the financial markets. I trade myself, and I've invested for over 15 years in the markets, so I have a vast experience in that, and I've also been conducting trading and investing seminars and workshops in UK, USA, Nigeria, Rwanda, and Ghana, and I'm also a guest lecturer at the CAS Business School in London, where I teach undergraduates and MSc students on alternative investment management. So basically, when I teach you how to trade, or when I teach people how to trade, I teach them out of experience, and I haven't, and still am a trader, so I'm teaching you from experience. So it's not from a textbook, and most of what I teach you won't find in a textbook. So it's from experience, and I always advise people and clients that if you're going to learn how to trade, it's very important you learn from an active trader and not someone who's never traded, because you do have people out there who teach people how to trade, but they've never traded themselves. So it's very important, when you're learning how to trade from someone who's actually trading the market, which is what I do. So hence why I'm introducing myself. And like I said, also I'm one of the directors of DKB Markets, which is a global online brokerage company, which we partner with industry professional traders and platform providers who operate in London, Europe, and Australia. But the main focus of the company is to provide a dedicated service in Africa, and in particular Nigeria, and also East Africa. And we're also looking to train and mentor traders in Nigeria, East Africa, and eventually across Africa. So that's who I am. And DKB Markets, like to say, we're an online Forex broker. So we give you the access to the market to trade the Forex market. But also, you can also trade equities, global equities, and commodities on the platform too. So apart from providing you the platform to trade on, we also increase awareness on online Forex trading, and we put a lot of focus on education and mentoring. And the whole aim is to empower you and help you trade yourself to financial freedom. So we do seminars and workshops, live and online like you have today. We also have a 2-day Forex trading masterclass, which is followed by online mentoring. And we also provide the online trading platform, like I said, and we provide local account funding and withdrawal for clients. And we also provide managed accounts for clients who've got the money but haven't got the time to trade. So what we want you to do is to register for online webinars, which we do fortnightly. So you can register for the free webinars. You can also like us on our Facebook page, which is facebook.com/DKB Markets. You can follow us on Twitter, but also open the practice account or live account and just spread the word about DKB Markets. Okay. So that's our website, email, our contact details. So you can contact us via info@dkbmarkets.com and our Facebook page or Twitter. Okay, so today, like I said, we'll be talking about the basics of the Forex market, what it takes for you to be a successful trader, and also why, the Forex market is the best market to trade compared to the other financial markets that you can trade. But before we start, it's very, very important we emphasize the importance or the difference between trading and investing. And that's a big problem that most people have with the financial markets. They don't separate trading from investing, because there's a big difference between trading and investing. Trading is short-term, so you're just getting in and out of the market. So trading, you're trying to get your profit or gains within a couple of minutes, couple of hours, couple of weeks, or sometimes a couple of months. But it's extremely short-term. So trading is short-term, whereas investing is long-term. So investing is usually for retirement. You're looking at 10, 20 years down the line. So trading is short-term. You getting in and out of the market quickly. And then investing is long-term. You're looking at 10 to 20 years down the line, and that's for retirement. So, the mentality you have as a trader is completely different from the mentality of an investor. And obviously, the trading plan or the trading concepts or how you approach the market as a trader is completely different of how you approach the market as an investor. So a trader and an investor, completely separate concepts and mindsets for that. Okay, so very, very important that you realize that. And we all know Warren Buffett. Warren Buffett is the richest investor in the world. He's actually, I think, about the 4th richest man in the world, and he made his entire wealth from investing in the financial markets. And I love this quote from Warren Buffett where he says, "Risk comes from not knowing what you are doing." Because we've all heard about horror stories in the financial markets. We've heard about people losing money. Anyone that you talk to about the markets, the first thing they tell you is always risky, and you can lose a lot of money, which is true. But the vast majority of the reason why this happens is because the vast majority of people who get into the financial markets do not know what they're doing. And because they do not know what they're doing, that's why most people lose money. So that's why risk comes from not knowing what you're doing. But you find that once you have a good foundation and you understand the markets and you know what you're doing, it's not as risky as people make it out to be. So what are the financial markets? I mean, we all talk about the financial markets, So what exactly is this thing called the financial markets? Now, the financial market comprises of four major components. Four major components comprise the financial markets. You have the fixed income. So that's one major part of financial markets. So the fixed income securities market is comprises of bonds and treasury bills. So bonds and treasury bills comprise the fixed income securities market. Then you also have the stock market, or some people call it the equities market or securities market. They're all the same terminology for the same thing. So it could either be the equities market, the stock market, or securities market. It's based on shares. So that's another big part of the financial market is the stock market. Then you have the forex market, the forex market. And then the final one is the commodities market, where you have like oil, gold, coffee, wheat, and commodities. That's commodities market. So these four major markets are called the financial market. So you have the stock market, currency market, the forex market, and the commodities market. So these are the four major markets that comprise the financial markets, and they're separate. They're different markets with different characteristics. And it's very important you realize that they're separate markets in themselves. Now, the other important reason of now differentiating these different financial markets, because it also helps you assess the risk you're taking when you now approach one of these markets. Now, if you're someone who has a low risk appetite, you're adverse to risk, you don't want to take any risk. So if you want to invest in the financial markets and you're looking for low risk, then you will go for the fixed income securities market. So the fixed income securities market is the only one that will give you very low risk. So they're looking at then investing in bonds and treasury bills. So that's the low risk market, this fixed income. Now for medium risk, you're now looking at long-term investment in the stock market. And the key word there is long-term investment in the stock market. So long-term investment in the stock market is medium risk. It's riskier than the low risk, but it's not as risky as trading with final risk. So when you come to high risk, that's now trading the forex or commodities market. So as you can see, there's the importance of you now separating different components of financial markets, because if you're looking at the fixed income market, that's low risk. If you're looking at long-term investing in the stock market, that's medium risk. If you're looking at trading, then you're looking at the forex and the commodities market, and that's high risk. So basically what we're going to be discussing today, the basics of trading is high risk trading. Obviously, high risk means there's a risk of you losing money. Again, if you learn how to trade, and then the basics well, you'll be able to manage this risk and be a successful trader. So what are the basics of trading? Trade with cash flow. All you want to have your mind especially unless the rules of the trade. There are rules to trading. Like any other thing or any other game, you need to learn the rules and know. Otherwise, without the rules, you will fail miserably. Also, trading may involve heavy losses. As we've said, it's a high risk market. Trading may involve heavy losses, which must be minimized. Strong development of your mindset. So your mindset and your psychology is very important in a successful trader. To be successful trader in financial markets, you must possess what we call the 3 M's. And note what I said, I'm talking about you being a successful trader in the financial market. So basically you can trade any of those financial markets, but you need to apply the same principle regardless of what market you're trading, whether it's a commodities market, the foreign exchange market, the stock market, the fixed income securities market. Whatever market you're trading, again, I'm not talking investing, we're talking trading now in this presentation. So when you're trading, regardless of what market you're trading, you need to possess what we call the 3 M's. Because if you apply the 3 M's to every single trade you place, your success as a trader is guaranteed. If you miss 1 M out in your trading, then you're definitely going to fail as a trader and you're definitely going to lose money. So I'll repeat, this is very important. If you apply the 3 M's to every single trade you place, you're guaranteed to be successful as a trader. But if you miss 1 M out, you're guaranteed to fail as a trader. So you can see it's very important that you must apply all the 3 M's to every trade you place if you want to be a successful trader in the financial markets. So what are the 3 M's? And these are the 3 M's: mind, money management, and method. Those are the 3 M's that will, guarantee your success as a trader. And you apply all 3 to every single trade you place. The most important M is the mind. Over 90% of the success is in your mind. So a disciplined mind is an absolute requirement for successful trading. And the proper terminology for the mind is trading psychology. So that's the proper terminology for the mind part of these 3 M's, is trading psychology. And you find that, the 2 biggest emotions that can severely affect your trading or your success as a trader are the emotions of fear and greed. Fear and greed are the two biggest emotions that leads to people not being successful as traders. Obviously, greed means, you get greedy, you take unnecessary risks, you don't apply good money management, and you take unwarranted risk and blow your money. So that's just down to greed. Obviously, your fear of losing will then make you freeze and not place trades, and if you don't place any trades, you can't be successful. So those are the two biggest emotions that can affect trading. Other emotions can affect trading, distraction, anything that can cloud judgment and prevent you being objective can have a huge impact, mostly negative impact on your trading. So the mind, the first M, absolute requirement for your success. The next M is the money management, which is, as closely important to your success as mind. Because without good money management, you're definitely not going to succeed. You need to know how to manage your money as a trader, assess your risk, and limit your risk. So money management is possibly the most important factor in trading, because the first goal of money management is survival. You need to avoid risk that will put you out of business. Like I always say, under no circumstances there should be the occasion should never arise whereby you lose your entire capital on one trade. So you should never risk your whole capital on one trade. So you need to survive to trade the next day. So your first goal of money management is survival. The second goal is to earn a steady return, and the third is to improve. And money management itself is a huge topic, very important topic in trading, and we'll cover that in weeks to come. So money management and mind, very, very crucial in your success as a trader. The third M is a method. So you must have a plan of how you're going to approach the market, or a methodology to your trading, and it should not be based on tips from friends. It shouldn't be based on hunches of how you feel or visions or dreams. As a trader, you have to have an objective method of how you approach the market. You have to have a written down plan or method or strategy of how you're going to approach the market. And you need to be consistent and stick to that plan. So you have to have a method. You don't just take pot shots at the market or throw darts at the market. You need to have a well-considered plan and stick to that plan. So these are the three M's that will make you successful as a trader, and you need to apply them to all your trades. Obviously, each of these M's are a huge topic on their own, and we'll tend to cover them in our master classes and our live seminars. But we also cover some of them on the online seminars. So do register to receive emails from us on our database, and you'll be able to be contacted with our subsequent online seminars. So the three M's, absolutely crucial to your success as a trader. Now, we said earlier, the financial markets comprise of the fixed income securities market, the stock market, the commodities market, and also the currency market. But what's the forex market that is the preferred market to trade? Now, there are lots of advantages to trading the FX market. One is a very diverse market. So you've got huge diversification of the market, because you trade, currencies from different countries, from Switzerland to Australia to Japan to UK to USA. So there's a lot of diversification trade in the market. And obviously it's a global market. So it's not you just trading a local market. It's a market that is more difficult to manipulate, because being a global market, a huge global market, is actually very difficult to manipulate compared to other markets, because the commodities market, the stock market, and the bond market, the market, are very difficult to manipulate. So that's a big advantage of trading the forex market. The other advantage of trading the forex market is that you can trade it 24 hours a day. So the forex market is open from Sunday night all the way through to Friday night. So it's open 24/5. So there isn't an opening or closing time during the week of trading the forex market. You can also trade the market electronically, which is a huge advantage. So you don't need to keep ringing your broker or ringing anyone for you can trade forex electronically. This is where DKB Markets come in. We provide you the platform that gives you the access to messages electronically, comfort home, your laptop, your iPad, your iPhone, make decisions trade. It's a huge limit. We're going to talk about the forex market and bring money quickly because of this liquidity. It's a market that is traded on leverage. Obviously, you have to remember that although leverage can enhance your profits, they can also enhance your losses. So you have to remember that leverage works both ways. The forex market is relatively simple to trade compared to the other markets, and it's a good technical market. Due to the volume analyze that of the forex market and test the full sections on that. So technical analysis and chart reading for the forex market is here. They're easier to read, they're easier to take decisions on compared to other markets. So it's a good technical market. So you can see for all this forex market, a market for traders. Now we'll get some background for FX trading, where it's come from and what's here, this FX trading. Remember that there is no secular exchange for FX market. Looking at the commodities, exchange, the stock market, there's no central exchange for that. So controls no central exchange. It just functions through a global networks of banks, corporations, and individuals trading one currency for another. So again, this is why it's a difficult market, almost impossible market to manipulate. FX countries, so that's what the FX market was mainly, devised for. The find that what's going to be this is what comes out of separation out and dealing. You have more than $4 trillion every day. Each $4 trillion traded a day in the market. The fixed income market, stock market, commodities market, the market, and again, this is why it's easy to trade this market, easy to draw the problem. So when you talk about FX trading or currency trading or forex trading, you're not buying and selling single currency. So you're not buying and selling dollar on its own or pound. What you do is you're trading one type of currency for another in what is called a currency pair. So FX is a two-dimensional product. So FX trading or forex trading is two-dimensional. The two-dimensional product is quoted as a price of one currency against another. And this is very crucial if you're new forex trading to know that you always trade currencies in pairs, and that's why they're called currency pairs. So FX is a two-dimensional product, quoted as the price of one currency against another. Now, when you see a currency pair and you say the base currency is quoted, and this has a constant of 1. So the base currency is buying or selling. So like I said, the base currency is always quoted against, and this has a constant of 1. And this base currency is buying or selling. Okay? Very important. Now this is an example here. So this is an example of it. So you can see here, it's Euro, US. So you can see that's how they're always quoted in pairs like that. And you can see Euro quoted first, so that's base currency, so first. So Euro quoted first, that's base currency, so that's a constant 1. So the currency pair will be, if you want to interpret this currency pair to be 1 euro by 1.2 US dollars. So remember, base currency first, that's Euro first, and also has a constant of 1. And this pair will be set. So I want to buy this pair, it's very important. The other thing to note of importance in forex trading pips. In the forex trading on the forex market, the increment are made in bits, which means percentage inputs. It means percentage inputs, and this is how the market increments are made. A pip is 4 digits. All currency is a 4 digit. All currency pairs, except for the 2010. So any currency pair the Japanese yen is the second digit. So for all currency pairs, so long as it's not within the currency pair, a pip is the 4th digit. But once you have yen in that currency pair, pip is the second digit. Again, all currency pairs. The yen is not among the currency pairs. So for all currency pairs, when you hit the currency pair, and this example, a pip 4th digit. Once you see it, so 1, 2, 3, 4. So you start counting your pips from the 4th digit. And then once you have yen in that currency, the second digit, the currency commences on the second. Sorry. Okay, so here's the basics of forex trading. And like I said, remember the 3 M's. Apply this all, you make a successful trader. And these are the ways you can contact us for Africa, and also register to our database so you can take our subsequent online webinars and also the live sessions we do, so you can learn more on trading. Okay, so if you have any questions,